How's it going? TK Pryor, Master Wealth Builders LLC, and I want to just talk like a math teacher. You know, a lot of times a math teacher will explain calculus, and the better teacher finds better ways to expose you to the principles. And it doesn't matter if you think calculus is hard or not, they just try to break it down where it's easier for you to digest the principles, right? So, today, the principle in financial literacy and financial IQ, the idea today is to use an asset, use a product. In the world of financial services, there are products. So you have to be willing to use a product in the world of financial services that helps you get ahead, stay ahead, helps you financially to do better than everyone else who refuses to use the product. So there are companies that design financial products to help people to make their money work smarter, right? Insurance companies create financial products so that people who use them get ahead of people who don't use them. So this product is from a insurance company, and the insurance company's purpose is to help you to financially use a tool that makes your money work smarter. It's a savvy, more advanced principle. So I'm working with a client, and the client says, listen, I'm about to retire. I have a shortage of $2,000 that I need to make up for once I no longer am working for my company. So I said, okay, let's look at your retirement account, see what's in it, and then let's work the problem backwards. Let's try to figure out what does it take to generate $2,000 with the fixed index annuity product from the insurance company. So this is a product, a financial service that's designed to help you get ahead. And we are trying to solve a problem. The problem is my client is retiring and he needs to come up with a shortage of $2,000 a month based on his bills. So I said, okay, looking at a fixed index annuity, we're going to plug in some numbers until we get to 2,000. That number is around 350,000, give or take. So 155, 300 plus 300,000. So he needs $2,000 a month. If he plugs in 300,000, he immediately will get $2,000 a month in a fixed index annuity, which has an immediate payout. Where you have the option to go long term or you have the option to go short term. Short term is in less than 12 months. You're going to start receiving payments. Long term, typically in a maturity vest period, is over 10 years. All right. But you make that decision based on your needs and based on what you have. So all you have to do is roll over $300,000 or more from any other account and put it into a fixed index annuity. In his case, we're going to do an immediate payout, which means 12 months or less, he's going to start receiving that payment. All right. So the rollover will give you an immediate payment. That's his needs. If you don't have an immediate need, meaning you don't need the money anytime soon, you're thinking about a long-term strategy, 10 years or more, then it allows your money to compound in 6 to 7% so that your payment goes higher. He needs $2,000 now, so it takes $300,000 to make that happen. But if you don't need $2,000 right now and you roll over $300,000 from any other account, it's going to grow in the 10-year vest period. So that payment is going to be more than $2,000 10 years from now because you're getting 6 to 7% compound interest every single year. And your principal is protected. Unlike the stock market, over here you can't lose money. So every time the stock market does what it's doing right now and everybody's panicking and losing their motherfucking mind, this product just doesn't credit you anything for that year. So on market means you lose money and you pull your hair out. Off market and a fixed index annuity means you just don't get a credit that year. Your credit is zero. You could even pay for a 1% credit, but that's an additional fee as a rider's added to your policy. So this is economically savvy. It makes economic sense. It's smarter than the people who refuse to use it, and it solves problems. In my client's case, it's an immediate payout. In your case, it could be a guaranteed retirement check, because once you start receiving these payments, you'll never outlive your money. Difference between the stock market. You start receiving payments with your 401k, eventually it depletes to zero and you're taxed. With the fixed index annuity, you roll over this money, guess what? You're paid until 120 years old. And you could put yourself in a situation where you're taxed on the gain, not on the principal, or it could even be tax-free. It just depends on how savvy the person is that you work with. So it matters what agent you get this from and how it's set up. So what I would like you to do is, if you've been laid off, I'd like you to use this product because it could save you, right? Because there's a situation where when you do your rollover, you can get a 10% bonus on anything you deposit within the first year. So just think, the $300,000 plus the 10% bonus plus any additional deposits that you make within the first year, guess what? You still get a 10% bonus on that. So this can help you financially, because if you just got laid off and you're worrying about, I'm going to do, here's the solution. Roll over, get the bonus. Guess what? Either do an immediate payment or wait 10 years to get your payment. We could even set it up where you do a rollover and a portion of the money that's in your account comes back to you. Not as terms of a bonus, the bonus is part of it, but I'm saying a cash withdrawal with or at the time of the rollover, so that you can benefit financially from a lump sum of cash. That can be built in. When you submit the application for the rollover, you just submit a letter that says, I want X amount as cash back to me. And they process all the paperwork in the background. You don't do any goddamn thing. All you do is submit the paperwork. Your company talks to the insurance company and they do the shit in the background. I had a client that did all of the stuff herself, and it made it take longer because she wouldn't just take her hands off. Stop operating out of ego. The companies will do it for you in the background. A rollover is a process that is meant to help you financially. If you've lost your job, this can help you. If you need immediate cash in retirement, this can help you. If you're willing to use this tool, click the link in my bio. If you're not willing to work with me, go to any licensed agent that you trust. Just make sure they're very studied in long-term strategy.